is probably the most dangerous time ever, 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 ever. There's nothing to compare it to.
Hey, what's up guys? Finally, stock market starts showing some cracks, and those cracks could just be the beginning of the big storm. In this video, I will give you 3 methods on how you can profit from the upcoming stock market crash. Like always, let's take a minute and see what has been happening to this market. This economic and stock market growth was one of the largest expansion in the history. More than 10 years ago, we have seen non-stop bull market run. After the 2008 housing bubble and global financial crisis, S&P 500 dropped to $700 a share. Since then, year after year, it was reaching new all-time high one after another. And recently we hit close to $3,400 a share. That's close to 5 times return on your investment. Sounds great, right? But now we have witnessed some cracks in this stock market expansion. S&P 500 was in red for the past consecutive 4 days. It dropped from $3,400 to $2,870 a share. That's a 15% drop in just 4 days. And it shows worst days since 2011 when S&P 500 dropped from $1,330 to $1,120 a share. That's a 16% drop. And I do not believe that this is over. It could just be a beginning. When stock market goes up, it takes escalator, and when it goes down, it takes elevator. Well, there is a number of options we can use to position ourselves before the stock market decline. First method is the most dangerous one, but if you do it right, if you hit the nail on the head, you can come up profitable. What I'm talking about is short selling or buying put options. There is a number of highly overvalued companies out there, considering the fact that money currently are so cheap with such a low interest rates. Personally, I would never short sell anything, as it goes against my fundamental principles. But buying a put option is something that I can consider. I know I made a video how Tesla short sellers are going bankrupt recently, and it was the case since the number of short squeezes happened while the price of the Tesla stock surged rapidly. I don't think such a high market price of the Tesla can justify their revenue growth relatively to the market cap, even though they lost less money in 2019 than in 2018. It seems like to me, the more cars they produce, the more money they lose. I'm not sure if this is a sustainable business model, especially if the stock market is about to go south. If you look at the Tesla stock pricing chart, Tesla exploded in October, trading from $250 a share all the way to slightly below $1,000 a share in just a matter of few months. That's a 4x increase in such a small time frame. But then, stock market starts showing some cracks and Tesla stock plummeted, dropping to the current price of over $670 a share. That's more than 33% drop in just few days. Buying a put option in such a volatile stock could potentially make you some money. Second method is probably my favorite one, and is to keep a decent size of your portfolio in cash. Probably 20 to 40% is a lot of cash to deploy in the recession state when there are many bargains on the street. Right now, my cash position is around 35%. Let's take a look at one of the greatest investors in the world, Warren Buffett, and his Berkshire Hathaway conglomerate holding company. Berkshire Hathaway trades currently at $500 billion of market capitalization, while his cash position on the balance sheet is close to $130 billion. That's a 26% of cash of the total company sitting on the sideline and waiting to be deployed. If you look at this chart, we can see that his cash position drastically decreases during economic declines. As he said many times over and over again that he isn't trying to predict stock market crash, but he just cannot find good value for his money. But when market goes south, there are plenty of bargains on the street sitting around and waiting for someone with money to pick them up. Lastly, there is another useful method that people can use to position themselves before market goes south. Let's take a quick look what Robert Kiyosaki, an author of very popular book Rich Dad Poor Dad, has to say about how to prepare for the market crash.
And so is it a spooky time? Damn yeah. It is probably the most dangerous time ever, 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 ever. There's nothing to compare it to because there's never been a world economy before. For example, 100 years ago, if there was a stock market crash in England, it didn't affect anybody. But now the U.S. market goes down, the world goes down. So plus with social media and all this we're doing now, and so we've never been here before. And I'm excited about it because I make more money in crashes than I do when they go up. So, but for the average person, they'll get wiped out. I'm afraid at the worst, I hope I'm wrong, but I think we're heading for a global depression.
Global depression?
Yeah.
What does that look like?
Depression. I mean, people are depressed. The economy stays down. It's hard to come back up. And now the good news is that for those who are prepared for it, like you and things like this, you'll do better. See, not everybody dies in a plane crash. Some plane crashes. But the last crash in 2008, I was on Wolf Blitzer's program 6 months before Lehman Brothers went down. And I said Lehman was going down. And nobody listened, but it went down. And so I've been expecting this market to go down for quite a while. And I'm concerned about my fellow human beings. But as you know, most Americans are clueless. They don't know what's going on. But if you travel the world, I just got back from Africa and China and Japan and New Zealand. People are scared. Australia, which hasn't had a recession in 30 years, is in recession. But Americans are fat, dumb, and happy, having a good time, which is good. But I'm concerned. That's all I can say. I'd be afraid if I had kids.
You'd be afraid about having kids today?
If I had kids, no. I think as an adult you can go hungry, but you don't want to see your kids go hungry, and that's what's going to happen.
Do you think it's going to get that bad?
Yeah.
Let me ask you this: what is the biggest factor that's going to cause that?
And the U.S. dollar is fake. Never in the history of the world has any fake money ever survived. And we're doing the same thing. We just keep printing this money. Now, today, there's quantitative easing, which is counterfeiting money. And then you have zero interest rates. And people are still saving money. Are you nuts? They just printed, I think, $500 billion in September of this year because the repo market is going down. And the average guy goes, well, what's the repo market? They don't know. Today, when I refer to 2008, most people remember 2008. Do you know what I mean? That's when Lehman went down, Bear Stearns went down.
38% drop.
Yeah, they all remember it. But when I started Rich Dad, Poor Dad, the only thing they had was the Depression. I came out in 1997. Rich Dad, Poor Dad came out. And their only reference points was the Depression. And none of the people I talked to remember the Depression. So the fear today, I think people are a little bit wiser, is because they do remember 2008 and they do remember 2000. So 2008, 2000, 2008, and here we are today. So I think most people are at least kind of tuned in. I hope it doesn't come down, but I'm afraid it will. That's what I have to say. Because the best time to start a business is right after a crash. I made more money after 2008 than I ever in my whole entire life. Because everybody was hiding like little cockroaches.
You made more money after 2008 than your entire life.
Yeah, so when, here I'm talking about the coming depression, everybody says, oh, you're such a pessimist, I'm going, no, I'm excited. I get sexually stimulated thinking about all the bargains that are going to be on the street, I mean, it's going to be bargains everywhere. But everybody else, oh, you're pessimistic. No, I'm actually optimistic. So anyway, so you're very smart. When I study business. Guys who start right after a crash do very well most of the time.
So let me ask you, the average person's watching this right now saying, okay, Robert, I'm not like you. I don't run a company. I don't have a brand. I haven't sold 41 million copies. I don't have oil. I don't have rental properties. What can I do? I'm in a time like this. You're telling me the market's going to go in shambles here pretty soon because of currency, and we printed $500 billion of money in September just in 1 month, not including the $3 trillion we printed in the last 7 years prior to that. What do I do to be prepared for a time like this?
Well, first of all, everybody can do something, but they won't. And that's the problem. The reason, who stole my pension, there was plenty of money in it, but nobody did anything. They just stole it. And people did nothing. It's like I said, when the crash came in 2008, not one of those guys went to jail. They got paid bonuses. So there's something rotten inside America. And I think the problem with many Americans is they're complacent. They expect, well, it'll heal itself again. So the thing that everybody can do is, as I covered in Fake, my first investment was a gold coin in Hong Kong. I bought a Krugerrand. I was flying off an aircraft carrier in Vietnam, and I went to Hong Kong and I bought a gold Krugerrand. The date was 1972. The reason the date's important is because in 1972 it was illegal for Americans to own gold. So I had to smuggle that little puppy into America. I put it in my pocket, came off the ship, and nobody checked, But I felt like a criminal as I smuggled this gold coin because it was illegal for Americans to own gold after 1933 under Roosevelt. But that gold coin today is worth almost $2,000.
The one gold coin.
Yeah, and I still have it.
What'd you pay for it?
$50.
$50 to $2,000. 1972.
Yeah, it just sat there. So I have and so I never, because I understand money, that quantitative counterfeiting and zero interest rates, I don't trust the dollar. So for most of my life, I've saved gold and silver, and not ETFs. I stay completely out of, I know that's your world, but my world is completely into the hard assets. So I have millions in gold coins and silver coins. I just kept saving it because I don't trust the dollar. So everybody can buy a silver coin today for $20. A silver eagle is $20. But how many people will go to a coin shop and buy it? Probably none. Less than 0.1% of Americans own precious metals. And silver today is 50% below its all-time high. So silver is the biggest bargain sitting in the market as we speak today. It's about $20. It should go to 50. So at $20, and I tell my friends, I go, yeah, think about it. And that's the problem. So everybody can afford $20. Kids can afford $20. The thing is, people won't do it, and you know that too. When you deal with people, most people are pretty sedentary. They want to do the same old thing. Well, I'm happy. Nothing's going to happen. Oh, you're just trying to scare me.
Precious metals, especially gold, is a good buy before market crashes. Let's take a look how precious metals performed during the various market declines. In the most recent global financial crisis and housing bubble, stock market dropped by 50%, while gold increased by 25%, and silver more or less was unaffected. During the dot-com bubble in 2000s through 2002, market dropped by 50% as well, while gold increased by 12% and silver dropped by 14%. 2 out of 8 most recent market declines, gold increased, which means that gold increased 75% of the time when the stock market goes south. But we cannot say the same thing about silver. Silver dropped 75% of the time when stock market drops. Therefore, gold is much more reliable precious metal than silver when it comes to recessions. But right now, silver is way cheaper compared to gold. Gold to silver ratio is the highest for the past 27 years. Currently, it's close to 100 to 1 gold to silver ratio, which means silver is 100 times cheaper compared to gold. Average gold to silver ratio for the past 100 years is around 30, which means silver could be a good bargain even in this price. However, as per previous chart, we saw that silver does not perform well during the market declines. Therefore, gold might be a better hedge. However, yesterday, both precious metals, gold and silver, dropped drastically. Gold dropped by more than 3%, while silver dropped by 6%. So essentially, stock market, gold, even Bitcoin went south. So those are 3 methods you can use to protect yourself from market crashes: buying a put option on overvalued stocks, holding cash, and buying gold. Let me know which method is your favorite and which one you're currently using. Leave your thoughts in the comment section below, hit that like button and subscribe.